Hey, welcome back to Money Mixology. As always, I'm your host, Jason. Today, I thought we'd dig into one of our brain games, one of these little short quizzes just to help you understand one of the really quirky biases that our brain operates under. So, I want to start by targeting the time of year we're currently sitting in. Middle of February, many people are filing taxes and looking forward to their tax returns. And I think it's one of those interesting times of year because a really, really strong bias takes over our finances, takes over our brain during this time of year. So I want to start with a short quiz for you, a short little game just to get your blood flowing and see what you think about this situation. Here's the scenario. I want you to think about money coming to you from a couple different places. So the first one I want to talk about is money you receive from your job. So this is your normal paycheck. It comes into your bank account. What do you do with that money? In a general sense, name a few things in your mind that you would do with that money when it hits your account. Okay, now I want you to think about a second source of money. This is an inheritance. Your dear grandma or grandfather or someone has passed away and they've left you a little bit of money. Now, what do you do with that money? In your mind, give it a few minutes to think about what it is you'd spend that money on. The final source of money that I want you to think through is your tax return. Let's say you get a nice little hefty, healthy tax return here in a couple of weeks. When that money hits your account, what do you do with it? What do you spend it on? Now, if you're like pretty much everybody else I've ever run this experiment with in real time, if you think about the first bucket, the money coming from your paycheck, you're probably talking about the necessities or what we would think of as sort of daily living. It's our rent or mortgage, our car payments, our food, utilities, clothing, et cetera, et cetera. So those are the kind of things that would normally be spent using that money. The second bucket, the inheritance, tends to be either some sort of I'm going to save it for my retirement. I want to honor my grandfather or grandmother's legacy, and they wanted me to put it away for a big future. So you may do that, or it may be something more extravagant like, hey, I want to honor this person by buying a piece of jewelry or something that would give legacy to the money. The third one is the tax return, and obviously the reason we're doing this video today, which is typically televisions. That is kind of silly, but we tend to view our tax returns as bonus money, extra money. And therefore, it becomes much easier mentally to sort of spend it on whatever it is we want to spend it on. The irony of this is that statistically, the most televisions in the country are purchased, well, first on Black Friday, which makes sense for the holidays. The second biggest time of year for TV purchases is right before the Super Bowl, which tends to coincide with when we get our tax returns. So this sort of drives home the point that people are making purchases they would not otherwise make. And this is the issue. The bias that we're suffering from when this starts to happen to us is the mental accounting bias. It is this propensity that we have in our head to view different sources of money as somehow different money. And I think if you take a step back and when I asked you those questions, you probably answered them similar to most people, because again, we all suffer from these things. No one's really immune from this type of biased thinking. But when you actually start to analyze it, you realize that doesn't make a lot of sense, right? It doesn't matter where the money came to you from. It's still now all your money. And so you should still have a plan for it. So when I get into these conversations and I have someone saying that they're going to use their tax return money for fill in the blank luxury that they're interested in, splurge, that they're interested in, new television, new car, whatever it is that they vacation, whatever it is they're planning to do. When they give that kind of answer, I push back. Was that your original plan? Was that in the budget? When you set your budget for this year, did you anticipate making a television purchase? Did you need a television? You had built it in and said, hey, this year at some point we need to purchase a new television. If so, different conversation, but that's pretty rare. Most of the time, these are unplanned splurges because that money wasn't anticipated, which really falls back on bad budgeting, but also it's just viewed as different. It's just bonus money. And so when we view it that way, it's much easier to just go out and blow it. That's the danger in getting subjected to this mental accounting, allowing ourselves to fall into this trap of putting money in these different buckets in our brain. Now, I do want to be very clear in breaking this apart from actually accounting for your money into different buckets in your, say, budgeting software, or if you keep a ledger for your money, however it is that you track your finances. You absolutely could and should be separating money into buckets that are important to you that you've pre-designated. And we've talked about some of these on the show, just sort of thrown them out there with an assumption that you understand what's going on. You have some of your money, if it's in your 401k, it has been designated for retirement. You have given that money a different purpose. If you've put money aside for charity, okay, that's fine. You've put it into a different bucket. If you set money aside for your kids' 529 plan for their college savings, great. You've put it into a different bucket. But all of those were uses of the money. They were buckets saying where the money's going to go, not where it's coming from. No one budgets, or you shouldn't be budgeting, based on the revenue source of money. That doesn't make any difference. And when we allow it to make a difference, we either make these sort of unplanned splurge purchases, or our budget gets a little out of line because it doesn't make sense with the way our life is actually happening on a daily basis. So let me give you a couple examples where it can get a little wonky if you're not careful with the way you're planning for the incoming money. If you have two spouses who both work and one makes significantly more than the other, if you are trying to somehow budget based on the inflow, it's going to be very strange because you're going to have, you both live in the same house, and yet how would you break that apart if one person makes significantly more than the other? Are you doing it proportionally? That just isn't really logical because, again, budgets are designed to be the money going out. It's the money leaving. What are we doing with the money? Not where is it coming from? And so if you think about the way you most likely built your actual budget, again, doesn't matter if you did it on paper or use the software system, whatever it is you use to track your money, the first step was to determine all the money you have coming in, right? You looked at all these different sources. You've got this job and you've got this job. And I think we're going to get some money for Christmas. And if you've done it properly, we're expecting a tax return of this amount. I have a year-end bonus for my company, so we should plan for that. There's all these things, and you just put them into one pot. And you say, hey, we've got $100 to work with. And now we decide where it's going to go. We use actual accounting, not mental accounting, real accounting on paper to determine where it's going to go. That's all completely acceptable. But if you were trying to break it apart by income source, it would just be a very strange way to try to control it. And it wouldn't be our natural mechanism. And yet we allow ourselves to do that in our minds with mental accounting. This also plays out, and I want to be clear about the way you're being manipulated by some of the vendors out there, some of the stores. And there is the one culprit that is just the poster child for this kind of craziness, Kohl's. Everybody is immediately going to know exactly what I'm talking about before I ever even get there. You're all in your mind right now. There is alarm bells going off saying Kohl's Cash, Kohl's Cash, Kohl's Cash. And yes, that's what we're referring to. Kohl's Cash isn't real money. It's coupons off a future purchase that you did not plan to make. So this is why a lot of these types of programs are so tricky to manage your way through, because they're relying on mental accounting, which is an imperfect, imprecise, ineffective way for us to balance our money. Menards does this with Menards Cash, which, by the way, is not cashback. That is a complete lie. It's Menards Cash that you have to spend at their store on a future purchase that, again, you did not plan to make. You went to the store. Let's use Kohl's. They're the most common one. You go to the store. You purchase a pair of jeans. That's what you planned to purchase at that store. You then receive that Kohl's Cash. It's now in your mind locked in as I must use this. Again, misrepresenting that the source should matter. It doesn't. But now you've got this locked into your brain with this mental accounting bias that says, I have this extra money I have to spend. So the next week you go back and you redeem the Kohl's Cash, which is, again, just a coupon off of Kohl's stuff. and you buy something you had not originally planned to buy. If you had, you would have purchased it last week when you bought the jeans. Becomes problematic for us because it starts to warp our sense of what money we have access to and what we should be doing with this money. A couple of personal ones that my wife and I joke about because, as I have mentioned many, many, many times on this show, I am not immune to these biases. I'm just as dumb as everybody else when it comes to money when our brain gets involved and starts doing crazy stuff. My wife and I laugh because we have what we call Poshmark money. So when either one of us sells something on Poshmark, it goes into your sort of account on Poshmark, and then you can use it to buy other things on the app. And yet, why is that the case? You can also just remove the money from Poshmark and deposit it into your bank account and use it for anything else in the world that you had already planned to purchase. And yet we don't do that. We just sort of say, no, 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 that's just free money that we can kind of play with. It's play money. That doesn't make any sense. It's kind of silly, but at least we acknowledge that it's sort of silly and ridiculous. And we just accept it as part of our, daily lives. Like, okay, it's fine. We recognize this is kind of a dumb way to do this, but we enjoy it. It's kind of a silly game. Let's just go with it. So we're okay with that kind of thing. But you do have to be careful with these type of situations if they get too out of control. If you have one spouse, for example, who is selling a bunch of stuff on eBay, let's say, and then using that money from the eBay sales to purchase things they would not have otherwise purchased and that the family did not really agree to in any meaningful way. There was no budget for it. There was no conversation about what we're buying. It's really just feeding sort of a personal habit that can be detrimental to the trust of the relationship. And you may not even think of it that way because the mental accounting is forcing you to view that eBay money as somehow different money. But that's not fair. That it's not different money. If you can remove it, which you can, sell it on eBay, take the money out, put it in your bank account. If you can do that, it is just valid income. And you should, as a family or a unit or whatever the relationship is, be deciding how that money is going to be used. When you go off on your own and treat this as somehow different, that becomes problematic. This can happen with inheritances. If we're together, we're married, and your grandmother dies and leaves money, and you believe you should be the only one using that money, that can be problematic. Doesn't mean the couple can't discuss it and decide, yes, that's okay. If it was your grandmother, I'm perfectly okay with you using it to do what you wish to do. Okay. But we have to be understanding that that money is now just thrown into the pot of all the other money. How we choose to use it needs to be discussed. So again, I just want this time of year kind of trips us up because the tax return is always the one that gets us. We have this tendency to want to go out and splurge. And again, TVs for some reason. I don't know how many we need, but apparently more than we have. And so the use of your tax return as something other than just income, also keeping in mind that tax return means you got less money in your paychecks throughout the year. That's why you're getting a tax return. You would not have treated that money that way if it would have come in through your paycheck. So if the same $2,000 tax return was split up among your 20 paychecks and you would have simply gotten extra money in each paycheck, you would not have treated that $100 as a splurge. You would have used it for the normal activities of your life, just like a paycheck. So be careful when we start breaking it apart in our mind. That's not real. When money comes in, regardless of the source, you have to treat it as income and then put it into your plan accordingly. What did you already plan to do with the money? If that's buy a television, great. But if it wasn't, then don't do that. That's a splurge that was unplanned. So that's where we are. As you prepare to file your taxes this year, or if you already have, just be really mindful of the trap you can fall in. I don't want anybody spending money they don't need to spend on something they never planned to purchase in the first place. So just be careful with that. Thanks for joining today. Thanks for listening. Again, please subscribe and like. It does help us. I sincerely hope you enjoy. Have a wonderful day, and I'll talk to you next time. It will be our live show on Saturday with a new guest, so please join us for that. Until then, have a great day.